2021 is a year of recovery as we see the governments rolling out vaccines and economies opening up. My name is Mervin. Today I have my colleague with me, Anthony Raza, to share with us on the investment outlook for SMEs. Hello Anthony. With the COVID vaccines rolling out, how do you see it impacting investments?
Okay, well, we're tracking the rollout of vaccines around the world, the growth of GDP and corporate earnings around the world, and the central bank's commitment to keep interest rates low. And so far we find that these factors are contributing to a healthy backdrop. We see vaccines as being rolled out faster than economists and investors were expecting at the start of the year. We see that the growth rate of GDP and corporate earnings are among the highest levels we've seen in 20 years, and that over the course of the year, analysts and economists continue to rise up their forecasts. And we find that central banks, despite all this growth, remain committed to keeping interest rates low. And all of this is contributing to a healthy backdrop for businesses and for markets in 2021.
What asset classes should SMEs focus now at this stage of the economic recovery?
As the economy goes through an economic cycle from expansion to slowdown to recession and recovery, different asset classes can perform differently at different stages in the cycle. As the data is clearly pointing to the fact that we are in the early years of a recovery cycle, the asset classes that perform best are growth asset classes like equities, corporate bonds, and commodities. But while we think that equities will be the top performer, we also note that in this cycle, central banks remain committed to keeping interest rates low, and therefore investors who seek lower levels of volatility can still invest in corporate bonds that have shorter durations in order to generate stable income at lower levels of risk.
Global economic growth is expected to pick up in general. Are there any geographies that you recommend?
We are overweight Asia. We like Asian equities and Asia fixed income. Asian equities do well when global growth is strong, global exports are high, and the US dollar is not overly strong. And we think that's all lined up to contribute to a strong year for Asia this year. Asia fixed income is not only going to benefit from the strong growth in Asia, but also we find that Asian fixed income yields are higher than we are seeing in other regions. And we think that Asia is also well positioned for a lot of the most exciting mega trends in investing that we are seeing around the world. Asia is a leader in many of the technology developments that are emerging trends, but also on the demand side that Asian demographics are contributing to a growing middle class and a growing consumer that's going to be a driver around the world in the years to come.
So speaking of Asia, what is your take on the US-China relationships?
Well, we think the investors shouldn't expect the Biden administration to suddenly turn China friendly, but we do think that for businesses and for investors, this is likely to be more of a clearer year for investing as the Biden administration will use more traditional diplomatic channels and a more multilateral approach to deal with the various tensions. But in the long term, it is fair to say that the US and China tensions are likely to remain high and will continue to be a risk issue that investors will have to monitor.
Thank you, Anthony, for a wonderful insight. As you heard from Anthony, the economic growth is still at its nascent stage and markets are still volatile. Do speak to your UOB advisor or any of your RMs for any investment strategies.